You know, everyone meets with a financial advisor at some point, maybe even multiple advisors. But how do you know which questions to ask so that you get the answers that lead you to the outcome that you're really looking for you and your family? Today we're going to spend time with Kyle Gherkin, who meets with hundreds of families every year and hears a lot of different questions. We're going to dig in so that you have the right questions to get the answers that you're looking for. Kyle spent some time talking today about how to interview a financial advisor. This is something that, most families don't interview, anyone on a daily basis unless you're hiring, right? Yeah. We're not in that position often. But how often do you actually interview a financial advisor? You've been with us for a number of years. You've met and talked with hundreds of families. Yep. And you've heard probably the full gamut of questions, over and over and over. But what we want to dig into is, what if we flip the tables? You take your experience, take my experience. I've been at this for about 30 years. If I were sitting on the other side of the table and I were looking for an advisor, what questions would I ask to really get to understand their philosophy, what's going on behind the curtain? How can I truly make the right decision to hire the right advisor for me and my family?
Yeah, absolutely.
So we're going to dig into a little bit of that today. There's 7 primary ones I think that we want to dive into. I think the first one is, getting into the holistic approach. And, families will often ask, hey, tell me about your company, all right? They want some background. But I think maybe a better question to ask is, how do you integrate tax planning, investment management, estate planning to ensure that I don't have any gaps in my plan? I think that's probably a great question to ask. How would we answer that? And, what do you see in that area?
Yeah, absolutely. So when we work with families, what we're looking for is a holistic approach, right? Not just singular focus on one area of a financial plan. And so what we often see is when folks come into our office, they may have one area of their plan that's, working decently well for them. Let's call it their investment management, right? But what they haven't considered is there's no real estate plan in place. Maybe they haven't thought about what taxes are going to look like for themselves, their families, their beneficiaries down the road. So what we're looking for, what gaps are there? And I think that's what families need to ask themselves too when they're hiring a financial advisor is, can you help me identify gaps? And if you do, what services, what strategies are here to help me mitigate them?
Yeah, and I think families are often narrow focused on just the portfolio only versus looking at everything across the board. And so asking that question of the advisor or the firm that they're working, that they're interviewing there to ensure that they're looking at estate planning, tax planning, and so forth across the board. What's an area maybe on the tax planning side that if they want to dig further into that to ask a company, well, tell me what you would do for me with tax planning. So whether we're dealing with IRAs or a brokerage account, what's something that they could dig in behind the scenes to really, find out, do you really do true tax planning?
Sure. Yeah, great. And that's a wonderful question. I think what we see oftentimes is families come in and they've worked for years saving into 401ks and IRAs. Maybe you have $2-3 million in an IRA and have no idea that IRA, let's call it $2 million, that $500,000 or more of it's not actually your money. That's the IRS's money. They've had a plan to tax you on that $2 million your whole life, and you have done no strategizing up until this point to mitigate that $500,000 or more that you may pay down the road. The other part of that too is on brokerage accounts. So I think what we oftentimes find is folks may have bought, Apple, for example, 30 years ago, crushed it. Apple's made them a ton of money, and 30 years later, they have no idea how to get out of that account. Right? If they start taking distributions, capital gains are now a huge problem for them. Let's say at the same time, they may have rental properties. They have income coming in from rental properties, pensions, Social Security, IRA distributions. What do we do now, right? So we have strategies in place to mitigate taxes in both account locations. So think qualified assets and non-qualified, which is wholly unique from the advisory side. You don't typically see that.
Looking at that full approach, I mean, we often see most families, whether they're working with an advisor or not, their plan just doesn't take into account taxes. That's like going camping without a tent. Yeah. You're missing an important piece there that you're going to pay for later probably, right? And so we want to make sure that that's taken into account. So, asking that advisor, hey, how do you integrate tax planning across the board with everything that I have going on? You know, I think another great question that never gets asked, can you describe your investment management philosophy, including how you handle the stock market when it's volatile? Let's say that a family asks that question, what kind of answer should they hear back? You know, it should be something that's probably pretty decisive and, you know, something that's very clear.
Yeah, absolutely. So I think when it comes to investment philosophy, when you ask a financial advisor what their investment philosophy is, if they don't have a very clear answer, start probing, right? That should be your first note right off the bat, that they may not actually have an investment philosophy. And we talked about a holistic approach here from the beginning. If you don't have a philosophy for investment management, for taxes, for estate planning, those are gaps, right? So from an investment philosophy perspective, right, you need to know how they handle market stress. So one of the things that I love to show clients is, hey, what did your portfolio do when the market had its most recent drawdown? And so for us, we see drawdowns as opportunities, right? Our investment philosophy is, hey, market drawdowns are going to happen. What opportunities are there for us?
And to dig behind that further, I would ask Mr. or Mrs. Advisor, when, you know, the last time the market dropped, you know, maybe it took last time it took a large drop, 10, 15, 20%. What did you do with your clients during that time? You know, I think it's a great opportunity to rebalance, buy low. You know, some stocks and ETFs will get oversold. It's a great time to do Roth conversions in that tax planning piece. So what did you do with your clients the last time that happened? I think that's a great question that just doesn't get asked.
Yeah, absolutely. And it goes back to clear communication, right? If there's no clear communication and no investment philosophy, how do I know what you're doing with my money when the market drops, right? I reached out to all of my clients in April, and if we had planned some tax planning things for that year, we were doing them in April because it was an opportunity for us, especially on the Roth conversion side. So if you're converting at lower prices and the market's recovered now 18+%, well, you got all of that recovery as free growth back to you. That's one opportunity that your advisors should be talking to you about prior to them actually happening. We want to be proactive instead of reactive.
Definitely great points. As we dig into this other area, which, you know, a hot term that, you know, has been around for quite a while is, are you a fiduciary, right? Taking that a step further is, as a fiduciary, how do you ensure that the recommendations are prioritizing my interests, especially when, you know, you're coordinating that with complex strategies, you know, when it comes to tax, investment, estate planning across the board. How do you ensure as a fiduciary that you're looking at everything, that you're not being guided or pushed by a broker dealer or someone to push certain investments on me? Yep. How do we make sure that that's not happening and that you're operating truly as a fiduciary across the board?
Yeah. One of my favorite things to ask clients is, when your advisor made this proposal to you, did you ask them back, is this something that you would recommend for your own family member? And how they answer that question is really telling as to whether or not they keep to that fiduciary standard. So that's first and foremost. Would you do this yourself? Would you invest this way yourself? Would you do this for your family? Secondly, what I often see is a conflict of interest that's pretty inherent in the large broker-dealer business. So think fund of funds, mutual funds. We see this often with families that come and visit us, and maybe they're clients of a major broker-dealer, for example. And when we go through their portfolio, what we often see is that that portfolio is 80 to 90% that company's funds. There's not anything necessarily wrong with that. Maybe those funds have done well. The problem is we have access to the full investable universe, which eliminates that conflict of interest that's inherent in using your own company's funds to fill out a portfolio. I think that's one of the main questions I would ask is, how do you eliminate conflicts of interest?
Yeah, and you know, what ties right into those funds and conflicts of interest in there is rate of return. You know, one of the questions we often get asked is, hey, the simple one is, what's your rate of return? And what families, I think, when you're dealing with a true professional investment, you know, manager, that the clients should have a custom portfolio for them, right? And so I think rather than asking, hey, what's your rate of return? Because we have hundreds and hundreds of clients, which means we have hundreds and hundreds of custom portfolios for each family. We don't have just a set off-the-shelf vanilla portfolio, right? So maybe a better question to ask is, how do you measure and report the performance of a portfolio? And how do you account for taxes and fees in there? What's the true rate of return? And how do I look at that in my portfolio if you design something that's custom for me?
Yeah, definitely. You don't want me to answer that question with what is my rate of return, because that means I'm just giving you a vanilla answer on a vanilla portfolio. Our clients' rates of return are going to be wholly customized to what they need. So one way I think about this too is, what is my risk-adjusted rate of return? How much risk am I taking on to achieve that rate of return? And what's its ultimate impact on my financial plan down the road, right? We can go out and hit home runs. That's no problem, right? But what do I actually need from a rate of return perspective to achieve that goal that I have for myself, my family, and our legacy down the road?
I think that's a great question. When families come in on an annual basis, that they should be asking, or when they're talking with an advisor, you said it there, but I don't know if everyone would catch it because it's not something that the public says every day.
Yeah.
What is my risk-adjusted rate of return? Which means, what kind of risk am I taking to get the return that I'm achieving, right? If I'm taking a lot of risk, that doesn't mean that I'm going to make a great rate of return, but it means that account can go up and down a lot probably. And again, what kind of outcome am I getting? So what kind of risk did I take to get the outcome that I'm getting, right? And that's a question that needs to be asked, and it just never gets asked, right?
No.
So I think another one, following that up, a huge one that I love this one. I love digging into this, which is assumptions that are in a plan. This never gets asked. So what specific assumptions did you use for rate of return, inflation, and taxes in my plan? And how did you stress test this plan?
Yeah.
Right? So what assumptions were made?
Yeah.
And what do we see?
Yeah. One of my favorite things, right, when we meet with prospective clients is they come in and they bring a spreadsheet and they have static rates of return that may be overinflated. They have static rates of inflation. They have static rates of healthcare costs.
So
Folks,
what we mean by static is they're the same.
They're the same.
Every
They're
year,
flatlined every year. Absolutely.
Right? And what we often see is high rates of return, 8%. They're overly optimistic over time, right? When we look at the true actual rate of return of the S&P 500 over the last 90 years, it's about 6.5%,
Yep.
right? So oftentimes just using 8, 9%, that's not realistic. No. Any portfolio in the world can look good at that rate of return.
Oh, yeah.
And then the other thing that we see is oftentimes low assumptions with inflation, 2%. Even from the big broker dealers out there, when they're creating a plan, oftentimes the thing that families miss oftentimes is not looking at the fine print, right? What was that assumed rate of return? And also, what kind of longevity did you build in? How long am I going to potentially live, right? Did you stress test this for bad times in the market? Right. And a big one, I think another one is, what do you see on the tax side?
Yeah.
Same thing.
Same tax rates all the way through, right? Which most often don't include state taxes, which can be a huge area. Imagine you live in California and your advisor didn't use a state tax in your plan. That could potentially be hundreds of thousands of dollars that you're missing. And maybe it shows you're going to run out of money at 85 when in reality, right, that money could last you to 95 or more. My favorite piece here is the healthcare piece. So folks that are using static inflation rates, let's call it 2%, for example, you can't apply a 2% inflation rate across the board on healthcare as well. I think we know here in America, right, that healthcare costs increase faster than the inflation rate on our dollar. So if you're using a static inflation rate all the way through on healthcare, you're missing a huge piece.
Yeah. So many financial plans are so optimistic out there that, they assume someone's going to live to 120 and that the market only goes up. Yeah. They missed the memo on gravity that day. It just doesn't work out that way, right? We need to be realistic. We need to stress test that plan for good times and bad times. We need to stress test that plan for bad times in the market, taxes going up, healthcare costs going up, right, across the board, right, and look at everything instead of just painting a rosy picture only. Let's be realistic on that outcome.
Yeah, anybody can create a rosy picture, right?
Yeah.
I can use 2% rates of inflation. I can use 8% rates of return. And yeah, nobody's going to run out of money in that scenario.
Yeah.
But is that really what you and your family are facing in the real world? It's not real world, right?
If I really wanted to dig behind the scenes, here's a little one, right? That I think would throw a lot of advisors a curveball, which is what kind of assumptions on inflation are you using for my Social Security?
Yep.
Right now, Social Security is increased by, I think the number is 2.3% historically.
Yeah.
But what we've seen is, yes, you might get a 2.3% increase in your Social Security gross benefit.
Yep.
But that's before Medicare gets taken out.
Medicare.
So once Medicare is taken out, what's the true increase that you're actually receiving?
Yep.
I would usually run inflation on Social Security, what I'm going to receive, maybe at 1.5%, something that's very realistic,
Yep.
right, historically. But that's a behind the scenes, behind the curtain number that, most families don't think about. And when you look at the difference, I know you've looked at this, when running the difference between a 1.5% inflation rate on increases in Social Security to 2.5%,
it's huge.
What's the difference for a family?
Game changer.
Right.
Yeah.
It's
a
hundreds
game
of
changer.
thousands of dollars, right? But it's not realistic to have that.
Not realistic.
No, no, it's a big one. Here's one we get daily, hourly, I should say.
This morning.
Head count. How many people work here? Now, I'm proud of the team that we have.
Yep.
And how many how many families we support because of the employees and teammates that we have here on a daily basis. But beyond headcount, how do you assess and ensure the depth of expertise across your team?
Sure.
I think that maybe that's a better question, particularly for tax planning and investment management, and to get me and my family the outcome that I want. I mean, really what people are looking for are trust and competence.
Yep.
You never interview the pilot that you're getting ready to, hop on the plane with.
Hey, hold on one second. I need to ask him a couple questions
Right.
before I board.
Right. It's trust and competence, or the physician that you're working with, right? But, how do we go about, helping families in this area and, and talking about that area with instead of asking how many people work here,
Sure.
right?
Yeah.
We want to ensure that, it's really about the trust and competence to get them the outcome that they're looking for.
Sure. I think one of the best ways to think about this is at the end of the NFL season, for example, nobody asks how many players you had in your team. They're looking at the win-loss record, right? Did you make the playoffs? If you made the playoffs, how many wins in the playoffs did you have? What's the ultimate impact to you and your family? It doesn't matter if you have a 53-man roster, a 55-man roster. How many wins did you have?
Who makes up that roster,
Yeah.
right? If you look in the NFL, and whether you're a football fan or not, we all know what really makes an impact on a roster are the coach and the quarterback.
Yep.
If I have a quarterback, as much as, living here in Denver, I'm not the biggest Patrick Mahomes fan. I respect him all day long.
Yep.
But, I'd love to have him on my roster.
Yep.
Right? It comes down to who's on the roster. What's the makeup of that roster? And I think an important piece of that puzzle behind the scenes that most people don't look at is, do you have a Rob on your team?
Yeah.
Right?
Do you have a Rob?
What's a Rob versus, a Rob is our Patrick Mahomes,
Yep.
right? That's an in-house CFA, chartered financial analyst. And, at the end of the day, the question I think that also is included in that is not just how many people work here, but who works here?
Who works
right?
here?
How many CFPs do you have? Do you have a CFA on staff that works here that really is helping to manage the portfolios, make the investment decisions on a daily basis? That's who I want to be making that decision. That's my quarterback behind the scenes, is that CFA. So I think a better question to add in there is, do you have a CFA on staff that I can talk with that is managing the portfolios, that's making those investment decisions? That's my Patrick Mahomes.
Oh, totally. I met with Rob this morning on a client case. One of my favorite things in the world is I can go down the hall to Rob's office and get input into how to structure a client's investment portfolio to put them in the best position. I can't imagine working in a scenario where I had to call two different offices to get a hold of the CIO who may be managing my client's portfolio. I can walk down the road or walk down the hall, meet with Rob.
It feels like a road sometimes.
We're down the road.
It's a long haul.
I can shoot him a quick Teams message and go, hey, can I get your input on this? Does this make sense? What risks am I not thinking of here? It's extraordinarily important. I would want that for my own family.
Right. Having an in-house CFA Huge importance. Here's one, again, hourly, but it is an important one. What are your fees?
Yep.
Right? Now, if we really break this down, what's a better question? Can you break down the full scope of your services, including your fees, to quantify the value?
Yep.
Does your value come out better than the fee that I'm paying?
Totally.
Right at the end of the day. If I were only concerned about fees or expenses, I'd go eat at McDonald's every day, right?
Yeah.
But I want a better outcome with my health.
Yep.
Right, and my family's health. So going and comparing, fees. Let's say one advisor's 1%, another advisor's 1%. That doesn't give me any idea of what they can actually do for me and the outcome that I'm going to receive, right? So how do we talk, so if a family asks a better question, can you break down the full scope of services, including your fees, to quantify that value that I'm going to receive? That's a better question. How do we discuss that? How do we dig behind the scenes to what kind of value should I receive? What kind of value should I be looking for in that answer?
Yeah, it's a great question, right? And the way to answer that is, what value am I getting for the fee that I'm paying, right? What gaps are being covered here that weren't covered prior to, meeting with EdRock or whoever the advisor is in that particular situation? The way I like to think about this too is, I can go get a steak at Applebee's, right? And may pay $20 to get that steak. How am I going to feel the next morning versus a steak I may get at Ruth's Chris or Ocean Prime or Mastro's, right? It may be a $50 steak, right? But it's way better for me, right? Or I can go to McDonald's and get a burger, right? It's not going to make me feel as good as that steak that I got at Ocean Prime, right? It's going to cost me a little bit more, sure, but the value to me at the end of the day is what matters most, right? Am I coming out ahead? So what I always ask clients is, hey, we shouldn't work together if you're not coming out ahead, right? If you're not winning in this situation from a value perspective, we shouldn't work together. And I wouldn't want to either if I were in your shoes.
Right. And as a fiduciary, we have to look out for that.
Yeah.
Right. And, at the end of the day, I think being able to quantify that and being able to see what is the value I'm receiving across the board. And, I think another one that, often isn't thought about that ties into this with that fee is, goes back to what we were talking about a moment ago. What's the team like that I'm working with? Do they have high and constant turnover?
Yep.
Is this team highly trained? Are they highly competent? In everyone from the front desk staff to the operations team that supports the advisors and the clients on a daily basis, that investment team behind the scenes, the analysts, the advisors themselves. How long have they been there?
Yep.
What's their training look like? Are they CFPs or are they working towards getting their CFP? Whatever that may be, at the end of the day, what does that entire staff look like? Because I don't want to be able to, if I had to call into a firm and just had a basic question about taking an RMD or I need a little bit of money, I want to make sure that entire staff knows me and what I'm trying to achieve and is looking out for my best interest and isn't going to make a mistake on making a withdrawal and not withholding taxes or whatever may be going on there, right? I want to make sure that I'm working with that competent staff.
Yeah, totally. The best question I may get in this arena from clients is, how often do the advisors meet? If I'm out one day, does another advisor know kind of what's going on with my plan? I would want to know, if I were sitting in the shoes of a prospective client and ask this question, how well does that staff know me? If I need something and my advisor's out that day, can I get my issue resolved through another member of that team? One of my favorite things at EdRock is we meet as an advisory staff multiple times a week, and we get to go over client cases together. We get to share input, share information together. That's one way in which I know most about what's going on with the other clients in this office. I know for a fact that if a client called that's not one of my own, I could answer any question that they have, right? Because we share details together. It's a team approach. I would want to know that it's not just a single advisor or a single operations person that's working on my financial plan, that it's a whole team.
Absolutely. Very important. And wrapping this up with a good question that we do get asked every once in a while, which is, Kyle, why should I choose you over someone else?
Yep.
Right?
Probably my favorite question.
Yeah. And, and we've hit on a lot of these areas, but if someone asks that, which is a good question, and every once in a while we do hear it, how would we answer that?
It's a very human question, And your answer should not be technical. It should not be what services I provide that are better than the next guy's, right? My answer in this arena is we genuinely strive every day to put our clients' interests ahead of our own and to produce an outcome that is optimal for you and your family, to give you exactly what you deserve and what you're looking for. That's how you answer that question, not, well, our access to investments is a little bit better than that next guy's, right? Or we do Roth conversions every year for our clients and the outcome for you is X, Y, and Z. No, we're striving every day to put you in a better position, and we're using the tools at our disposal to do so.
Yeah. And I think, adding a piece onto that would be the competency piece, which is, being able to sit down with someone and say, you know what, we've also worked with hundreds of families just like you.
Yep.
And they're getting the outcomes that they wanted, and we can do the same for you.
Yeah. Experience in this arena matters.
Experience matters.
Experience matters.
Absolutely.
Right? I want to know that my pilot, when I get on my flight here to go to California next week, has been flying for years. This isn't his first time in that aircraft. Right. Experience matters.
Yeah. So we've covered some great areas here. These are questions that if we were to flip the tables and sit across and we were interviewing financial advisors, what questions would we want to ask? Because we know, what should be asked behind the curtain, right? Behind the scenes, and to really dig into things. So appreciate your input on this.
Yeah,
this has
definitely.
been great.
This is fun. Thanks, Kyle.
So we want everyone to like and subscribe below. If you have questions, ask below. We'll make sure we get those answered for you. See you next time on Rock Talk.
See you next time. Thanks.
All right.